the max that I did at the same time was about 15 projects between rehabs, rentals, and new construction. And the key is really leveraging how I was able to leverage my time, my skill set, and funding, those three things.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 315. My guest today is a skilled developer and asset manager with extensive experience in full gut renovation projects, new construction, and commercial development. She owns a rental portfolio comprised of long and short-term rentals and is the go-to person when it comes to implementing processes that allow for scalability. Andresa Guidelli is the co-founder and CEO of the Real Estate InvestHER community, co-host of the Real Estate InvestHER Show, and co-author of The Only Woman in the Room, Knowledge and Inspiration from 20 Women Real Estate Investors. Andresa, welcome to the show.
Thank you so much for having me, Brian. It's a pleasure.
It's a pleasure having you as well. Why don't you tell us a little bit about yourself and how you got started investing in real estate?
I was born in Brazil, raised there, and I came to the US for my master's degree, right? So the plan was to go back, find a great job, and build a family, all the good stuff that we all know here. And things really changed here. I was doing door-to-door sales for Verizon, one of the hardest jobs that I've ever done in my life, but the goal was to get sales skills. And I didn't have the sales experience. Didn't want to be a salesperson, but I didn't have the sales skills that I was aiming for. And one day, my manager shared across the table this purple small book called Rich Dad Poor Dad. And that changed a lot. It kind of opened up a new and completely new world for me. I didn't even understand the concept of real estate, cash flow. None of that was on my vocabulary whatsoever. And I started researching more and going to classes and like those 3-day workshops during the weekend to really understand the concepts better if that was something that I was going to pursue. My ex-husband at the time and I decided that we were going to invest in our education first, and that's what we did. And then 6 months later, we bought our first house, primary, rehabbed it, overpay for the rehab, of course, but I was able to appeal the appraiser and get a higher HELOC, which propelled us to start investing in other projects. And then from that on, we did partnerships, we did new construction, and then grew our portfolio to long-term, short-term rentals. And now I am focusing on larger apartment complex acquisitions.
I want to start with your salesman experience for working for, you were doing door-to-door for Verizon?
Correct. Business to business.
And it's interesting, Robert Kiyosaki, who you just mentioned, is his book, Rich Dad, Poor Dad. He started off as a Xerox salesman. I don't think he was going door to door, but he was going company to company, business to business. Talk about that experience, that difficult experience, connecting with people at the doors and convincing them to purchase whatever product it was that you were selling.
I was very glad that the company itself had a very specific structure into process. So we had very specific goals for the week. We had a meeting on Sundays with our manager. We had specific number of doors that we wanted to knock on or to visit the business, how many bills we wanted to connect, how many decision makers we wanted to connect with, how many closings. So it was very, very numbers oriented, which was very helpful. On the other side, they also taught us techniques to sales techniques, fear of loss, Jones effect, in different things that I still use nowadays. But one of the most important things was like, how can you connect with people in a matter of like a minute or two? That's what all I got, right? How can I get to the person in front of me that it's saying that he's not the owner, but I know he is because his name tag is saying, and he matches my information. So how can I create a connection very, very quickly with somebody and understand their needs and fulfill their needs? And I think that applies a lot in real estate when we're talking to sellers or when we're making a deal with buying or selling, really connecting with the other person, understanding their needs and thinking about how can we fulfill that need. Another very important thing that I learned was like no means next. And emotionally, every single day I had to deal with rejection. I had more no's than yeses, right? And how I had to handle that no's and make meaning of it really determine the rest of my day or in my next few days during the week. If I had somebody that was very rude, I needed to, shake that off some way, shape, or form to continue my day. Otherwise, it's just very, very hard. And I think that it's a mix of skills that I gain emotionally and sales skills that really help me where everything that I'm doing in real estate. I look at those as transferable skills.
It's interesting you took that kind of salesmanship and that ability to connect within 1 or 2 minutes and you applied it to the appraiser on your home in order to get a higher valuation so that you could get a HELOC, which you then use to go out and purchase your first rental properties. Talk about that. How were you able to connect with the appraiser and get that higher valuation?
So the appraiser came to my house, and this was, keep in mind, this is my first deal, right? So I overpaid for the construction. Needless to say, I didn't know what I know now back then, but that was also a blessing from the sense that once I really understood the market that I knew as the palm of my hand. I knew the value of the property. I knew the ARV, the after repair value as well. So that was really good at running comps. So when I got the appraiser report, I didn't get the appraiser report. I got the number that the appraiser came with, and that was through my lender. And I was like, something is off. I would like to receive a copy of the entire report. And then once that arrived, I really dissected every single thing there and found loopholes. I found that the appraiser missed an entire bedroom. There were other mistakes that he made in our neighborhood. It was in South Philadelphia, it's very dense. And if you go more than a mile, you're basically in another zip code, another neighborhood, completely different. Does not make any sense to be a comp. So I created my own report, and keep that in mind. I cannot just call my lender and say, yeah, use my report, disregard the appraiser report. That doesn't work like that. But I plead my case. When the appraiser came in before I be report with him, I share a lot of information. So the lender connected, the three of us connected and say, would you consider looking at my report and seeing the discrepancies? And the appraiser agreed to do that. And that elevated my HELOC plus 25,000. So you really made a difference at that time for us.
Talk about taking that money that you were able to achieve through the HELOC and applying it to your first rental properties. What was that first property you went into, and what was the strategy you employed?
We pulled a total of $68,000. And the next project was actually a rehab, and it was a house was entirely burned down. So the only thing that I could look at the house was like, I took one step in the front door, took a picture, and I was like, okay, I guess it needs everything. But what I did know at that time, that I did not have the skills to take over that type of project. I did not. I knew that for sure. So I partnered up with my realtor at that time that was a very experienced investor. And together, I learned a lot from him, from the general contractor during the entire project. And on that street, I also saw two other properties that were not burned out, but very similar condition. So we ended up purchasing the other two as well. So we have three properties going on at the same time. And we start creating our own comps.
How did you find this other experienced investor to help you?
He was the one that helped us in different projects, but going to local meetings, meetups and RIAs, that's how we met him and start talking about his experience. I was not looking for a realtor that did not have investment properties. I was very clear on that. I really wanted somebody that understood. To me, if you really understand the power of real estate, you are investing as well. It doesn't make sense to me to just use it as a paycheck. So we built a relationship first. And I saw his projects. I saw he had at that time years and years of experience in rehabbing it. But he didn't have a lot of time, right, to devote. And I had just quit my job to devote full time in real estate. So I had more time. So we both came together and say, okay, what do I bring to the table? What do you bring to the table? And how can we work together moving forward? And we did several projects at the same time.
Can you go into some more detail on that first project? It sounds like almost a ground up rehab project. What were the numbers and what was the outcome?
That was in 2011. So I would not remember the numbers itself on that project, to be quite honest, but it was a full gut job. We had all four walls. Anything else inside was gone. And it's a typical row home in South Philadelphia, 3 bedrooms, 2.5 bath with finished basement. It was very intense project. It was not considered a new construction because we still have the more than 70% of the beams inside. So, but it was a very intense project.
Did you hang on to it?
We sold. That was a very specific area in transition that the intention was to sell that property.
So you sold the property, and then at the same time, were you looking at other opportunities? You mentioned 2 others in the neighborhood. Were you going in, buying up these properties and then rehabbing them and selling them off?
Yeah. That was the strategy when we started. I think a lot of people prepared for the worst case scenario, but sometimes we don't prepare for the best case scenarios. So in our case, another opportunity, 2 houses down, close to ours, came up. So we have like, okay, what we can do over here? Our HELOC was all inside that property there. All our investment was there. So we were creative with our realtor. At that time, he said, okay, how about if I bring the finance in and you guys manage the project and really pick the finishes and do everything else. So we started doing that until the first house sold it, and then we have more capital to invest in others. And at the same time that all of that was happening, our intention was not to purchase other properties at the same time. However, I couldn't say no to the opportunity that was just literally knocking next door. So we decided, how can we do this creatively and thinking about how long it will take, what is the cash flow that we need in order to continue maintaining those 3 projects at the same time. And then throughout the years, the max that I did at the same time was about 15 projects between rehabs, rentals, and new construction. And the key is really leveraging how I was able to leverage my time, my skill set, and funding, those 3 things.
Anyone who listens to this show knows that Green Property Management manages my entire West Michigan residential portfolio. They manage single families all the way up to large apartment complexes. Marty and his team are running a new special that I think is absolutely nuts. And I tried to tell him so, but he wouldn't listen to me. They want to offer new clients a $250 per unit project allowance to have their in-house licensed crew tackle any project, big or small, for new clients. I can tell you from personal experience that their unique management style will save you money, eliminate headaches, and increase your net operating income. You add on top of that this limited time offer of $250 per unit for new clients, and it really becomes a no-brainer. So text GREEN250 to 21000 or visit them on the web at livegreenlocal.com and tell Marty I think he's gone off the deep end with this absolutely nuts $250 offer. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Let's talk about that. You're leveraging your time, your skill set, and the funding. And let's take those three things: time, skill set, and funding. If you have 15 projects going on at the same time, how do you leverage your time? That's a lot to spread yourself out over.
If you're thinking about doing everything by yourself, absolutely. I don't know, 24 hours if you're able to do that, right? The goal is to really surround yourself with other people that you can really leverage the time. A couple of things that I would say. So I had different partners that were bringing different things to the table. So that was very important to me. And I was working with sophisticated general contractors that had project managers. So I had to go to the project basically once a week to walk through, see where things are going, and make sure that our scheduling, we are budgeting, everything is on track and moving forward. So there's a lot of logistics that goes around, more important than anything else. If you hire the right people, if you have the processes and systems in place, that is totally possible because everything is organized. I love Dropbox, so I put everything there, but it's very systematic. And if something is not going right, you got to nip on the butt and really make sure that you're always ahead of the money on your payments and following the schedule and the budget. So it's a lot to manage behind the scenes, but as you go, you have the similar scope of work, finishes. It's all mastered, so you don't have to repeat everything. And working with the right people is the key to me. If I need to babysit somebody, if I need to go to a project every single day, there's a problem. There's a problem to me there. I don't intend to do that unless there's something, it's unforeseen and we need to resolve it. Other than that, as project manager, once or twice a week, depending on the phase that it is, that's more than enough.
When you talk about managing your time and having your teams and your systems and everything in place, you make it sound very simple, like it's just A, B, and C, but there's always a bottleneck somewhere, and you have to identify that bottleneck and then figure out how to resolve it. So I'm just wondering if you can remember any specific instances where you had to come in and clean out that bottleneck.
All the systems and process didn't show up one day, right? It was throughout the years that I was able to build my foundation in terms of processes in place. I'll give a very specific example. Scope of work. Knowing your scope of work will determine or will affect directly the estimates that you're going to get from 3 or 5 different contractors. So in my opinion, it doesn't make any sense to keep doing creating a brand new scope of work every single time that I have a new project. So what I created throughout the years was a master scope of work that I adjust as per project as we go along. Same thing with payment plan. Same master payment plan, and then we put it over there to implement it in order to create those things. You have problems when sometimes the team is not skilled enough to understand the process or follow the process. That always happen. Finding the right people, it's one of the most important things ever. I'm not asking you to hire a skilled general contractor to do small rental repairs. That would not make any sense. But also wouldn't make any sense to hire somebody that it's not skilled in building new construction or multiple projects at the same time. And that was one of the biggest mistakes that I made when hire a general contractor. The contractor was doing a great job, and I was like, I love it. Let's do a second project or second and third projects all at the same time. And I have found that their skill set was in implementing and executing, not so much in managing the money, the capital going between the projects and running their business as a business. So they didn't have capital. And then one project start falling apart or being behind, and they are always looking for more money in order to fund the next phase. That was one of the biggest challenges that I faced it. So in order to overcome that, it's like, we're going to do one project at one project, and I see how you manage from A to Z, from the entire process. I need to understand how do we handle communication? How do we handle conflict? How do we handle when something comes up that was not on the scope, that it's a change order? How we handle all of that. And then after the full project is done, then I'll make the decision if I want to continue working with that person and expanding, doing multiples at the same time. But it's very important that the expectations are set prior. So the payment plan, it is in place prior of the first check written or money wired.
Let's talk about skill set, and particularly your skill set. What assets did you bring or do you bring to the table? And then what assets do you realize you don't bring to the table? And how do you leverage your skill set over the project?
So throughout the years, I've done different types of trainings and personality assessments and all the good stuff. So for all of you that read Traction, Rocket Fuel, I am not a visionary, although I have some visions in my head. I am the one implementing it. I am not the one, although I can have the skill set to create relationships with sellers and sit down and have those conversations. I don't enjoy that. And I partner up with other people that will love to have longer conversations and sitting down, understanding the story and doing that part. That's not what my skill set is on implementing process and systems and moving the needle, moving the projects forward. How can we break things down in smaller pieces and move forward? That's what an integrator does. So every time that we are executing something, okay, who is going to be the acquisition piece, the funding piece, the management piece, who is going to be selling? Although I have my real estate license, I hire experts, realtors, top-notch realtors to sell the properties because I believe they bring more to the table than I do. That's not what I do full time. So it wouldn't make any sense for me to be showing properties. It's really evolved, Brian, to be quite honest. What I was focusing on in 2011, 2012, it's different than what I am focusing right now. At that time, I had more time, less experience. Right now, I have more experience and less time. So every single project that I always ask, I'm not looking at just the profit itself or the cash flow. I'm looking how much time this is going to take from me. And sometimes I rather be part of a project where there are more people. I take less profit, but my time is also less.
Let's talk about funding, because that's the third part of what you talked about when it comes to leverage. How were you leveraging funding at the time? It sounds like you were working with other people's money.
When we started, right, there was no business credit. There was no business at the beginning. There was no LLC. There was no commercial account or anything like that. I was not even aware of that. So our first property was a primary, and we leveraged FHA in order to continue that. We got a home equity line of credit and pull that equity out to able to fund other deals. So in terms of funding, we leverage other people's money in terms of partnerships. They came and we did a JV and executed the projects. And then later on, a couple of projects down the road, we opened up a business. We had an LLC, a bank account, and we focus on acquisitions on the commercial side of the bank was related to the property itself, not necessarily under our own personal names for liability purpose. And then moving on, it's just really leveraging private money lending. It's one of the most important things because there are people with problems. They have a problem, meaning they have a high earning job, a W-2, where they're not necessarily wanted to wake up every single day and go to a rehab project. However, they would like to invest in real estate and get a better return on their investment. So we will leverage this throughout the years. But again, is this my highest and the best use of my time? No. So my business partners, one of them is Matt Faircloth, and he handles all the raising money. And then after we close, the ball comes to my court, and then I go.
It sounds like your business has evolved considerably since the first 15 projects that you did. Bring us up to speed as to where you are now. What is your focus on? What's your asset class and your niche, and what's your function within inside of that?
Right now, it's very focused on syndication, apartment syndications. And I have different skill sets that I bring to the table. The construction part is one of them, but most important, we leverage the community that my business partner and I build. We are the founders of the Real Estate InvestHER community, which is a community to support women to live a financially free and balanced life. And many of those women that are inside the community, they want to invest in real estate and don't know how. So we really leverage our community. We bring the opportunities to them, and they can ask questions. We teach how to vet the deal, vet the sponsor. This is very important to us. And very close to my heart is a project that we are involved called the Trailblazer, which has a social impact. Part of the units inside the apartment complex will be dedicated to women in transition. We're looking to do partnerships with a local organization. So this is a project that it's under development. We're looking at a couple of 3 different states. Right now is very challenging to make the numbers work. Needless to say, the market it's quite different than it was a couple of years ago, but we're still very confident that in a couple of months we'll land a very good deal.
Can you talk about women in real estate? Since you host the podcast and you talk to many women, and this is kind of the area that you're in, what are some of the barriers that you see women facing when it comes to getting into real estate investing? And then what are some of the assets that women particularly bring to real estate investing?
It's funny because when we started the podcast and we said, well, we're going to interview only women in real estate, a person said, well, you're going to run out of women, right? Because there is a perception that women don't invest in real estate. And we have found throughout those years that it's quite not it. A lot of women invest in real estate, are very successful. However, they're under the radar. They don't go around asking, how many doors do you own? What's your experience? How many years do you have? That's not what they care about. They don't even share those things. So different perspectives from that standpoint. However, there is a lot of quote unquote intimidation when we go to conferences and local meetings that we're sometimes the only one, right? Many times I was the only one. And we wanted to create a community where women feel safe to raise their hand and ask their questions. There's a lot of stereotypes. When I walk at the job site, for example, many times they ask me, are you the realtor? Are you the designer? Are you the architect? Right. So they look at me as a 5'4", barely speak English correctly. And they're like, are you the owner? Yeah, I am. I'm the one writing the checks here. I'm making the calls. So there's a lot of stereotypes when we hire somebody and they come and say, okay, do you need to check with your husband? It's just like, what is happening? We're not in 1950s, but I don't wake up every single morning and think, oh my gosh, I am a woman. What am I going to do here? I just focus on myself, on being the best version of myself. And majority of the people that I do business with are men. So we're not just saying, oh, let's support women and, let men on the side. Quite the opposite. We want to there's a gap, and we don't see representation a lot in conferences. And it has been changing because we have been having those conversations with organizers, and we're really building our own conference as well. But there are a ton of work that still needs to be done just to break the stereotype. And I think women bring a lot to the table. We bring different perspectives to the table. We challenge but let's think about this from a different perspective, right? And we see things as a whole. Naturally, we are able to manage different things at the same time. So we see the projects and the relationships as a whole. We just don't want to be underestimated. We are very well prepared. We have been learning and sharpening our skills behind the scenes. So it's just sometimes it's challenging when we have conversations where people are underestimating our potential, our skill sets, and our knowledge in real estate. So I have found that it's just fascinating. Women are just not sharing much. And that's why we have the podcast, because we want to hear those stories.
Early on in our conversation, you talked about when you were selling for Verizon, establishing rapport within a minute or two so that you could get to a yes. When you go to a construction site or one of your projects and you face these false assumptions of who you are, and you are perceived to be one thing when really you're the owner, how do you confront that misperception while still building rapport without breaking that rapport so that you can keep your team and the people who are supposed to be working for you in sync?
Humor. I think that's one of the most important things, that I put some sprinkle of humor on those conversations. And when it's time for me to put my foot down, I do put my foot down. And I am willing to walk away if the situation it's not okay. And I'm willing to fire the person on the spot, no problems. I was not like that before. I always thought, oh my gosh, how I'm going to have this conversation with this person. To me, it's all about the expectations, right? And I'm willing to understand and listen to the other person. I think that's one of the most important things, when you listen to them and see where they're coming from. And if you have a genuine person, they're not going to say that again, right? They're not going to say, oh, you need to check with your partner, your husband. That's not going to happen. And they will apologize right away. But if you see that somebody is really pounding on the same note over and over again and trying to make sure that I understand that the other person, I'll give a very specific example, right? Drywall. We were doing a very big project and I was going in the estimate. And then I asked the GC, like, the drywall line item seems a little high to me. Would you mind sharing how you come up with that? And then the answer was like, well, I have 30 years, 35 years of experience and blah, blah, blah. I was like, thank you. Thank you. That sounds like a great time. But my question was, how did you come up with that number? And I will tell you why I'm saying this, because based on the square footage of this property, this is the average here that we're looking for. So I'm curious to see how you came up with that number. So sometimes it just needs to be the nitty gritty. That's what I'm talking about. I'm not questioning your ability, your experience. Clearly, you're older than me. I that's why I hired you, because you are an expert. But it seems that on this line item here, there is a discrepancy based on the square footage of our property. So I'm looking to understand. I'm not going to pick on your profit, your overhead, or any of your numbers. It's just very off here. And I need to understand that before we move forward. So are you able to explain or not? And sometimes it's simple, sometimes not.
Did they give you an explanation for the high cost?
Well, sometimes they don't, right? So it's like, well, let me get back to you on this. I was like, that's okay. That's okay. Go get back to me on it. And then the next day he was like, we're a little off over here because we took in consideration the basement that we're not going to finish. I was like, okay, that makes sense. So let's adjust and move along. Move along. But it's important to build a relationship with everybody. I want to understand, like, what's your family look like? Because I want to have those conversations. Sometimes they have kids like I do, and they can't make it to the project because one of the kids are sick, right? So I want to understand and support them in different areas too. So building that relationship, it's crucial beyond real estate.
As we wrap it up, any advice for our listeners, whether it be about mindset, whether it be about being a woman and investing in real estate, any advice you want to share with our listeners?
Surround yourself with people, when you're in the right place, when you're like, oh my gosh, I am not the smartest person in this room over here. And sometimes I am really uncomfortable. Then you're on the right place. If you feel that you're very comfortable, that you're the smartest person sitting on that table, you're in the wrong room. So I encourage you to push a little bit the boundaries and continue investing in yourself, in your mindset, and all the rest will follow.
How would people get a hold of you or find out more about you?
You guys can find more information about our community at our website, the Real Estate InvestHER, HER.com, on Instagram at the Real Estate InvestHER, and our podcast as well, the Real Estate InvestHER Show.
I want to thank you for this great conversation, taking us through your early sales experience, how that helped you advocate for yourself with your first appraisal so you could get that HELOC money, which I see as pivotal to building that next 15-unit portfolio that you were able to buy and rehab and sell. And then all the way up to what you're doing now with the multifamily and understanding how to leverage those three areas, which are time, skill set, and funding. Thank you so much for having this conversation. It's been a pleasure.
Thank you so much for having me, Brian.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management,
now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.